Hello, I'm Herb Morgan, Senior Managing Director and Chief Investment Officer at Efficient Market Advisors. We are a business of Cantor Fitzgerald Investment Advisors. This is our weekly economic and market commentary for the week beginning today, Monday, May 14th, 2018. The information you are about to see and or hear has been prepared by Efficient Market Advisors for use with investors and financial advisors who are each expected to make their own investment decisions. Nothing contained herein should be treated as investment advice or a recommendation to buy or sell any security. With that, let's begin. We had an excellent week in financial markets last week. The equity markets were up across the board, bringing the rebound off the most recent short-term bottom to almost 5%. Most of that was achieved last week. The S&P 500 up almost 2.5%. Year to date now, all of the major equity indices you see listed are up and in positive territory. Lagging was emerging markets, leading domestic small cap almost 6% higher. Fixed income markets were flat except for high yield, which has a strong correlation historically with equity, up about 35 basis points, now putting it into the black for the year. But long-dated treasuries, which are highly interest rate sensitive, and the Barclays Aggregate Bond Index, which contains a lot of longer-dated treasury and mortgage-backed securities, both negative on the year. Commodities continue to perform very well. As listeners to this commentary know, the current holding for the alternative investments portion of our portfolios is an ETF which attempts to track the Bloomberg Commodity Index, and the Bloomberg Commodity Index itself is up over 2% on the year. Consumer credit increased in the month of March. It grew by $11.6 billion. That's several strong months in a row. Revolving credit, suggesting perhaps that the consumer is weakening just a little bit, fell $2.6 billion. That's on top of a decline the prior month as well. The National Federation of Independent Businesses released their Small Business Optimism Index. We also got producer price data for the month of April, and we saw that producer prices rose just 0.1%. They had risen more in March, 0.3%, and the consensus estimate of economists was for a bigger increase as well. Looking at the PPI on a year-over-year basis, which is what we put into the chart this week, we see they're up 2.6% from a year ago. Backing out the food and energy, which is a more volatile component, and that gives us the core, that's the blue line on your screen, that was up 2.3% on a year-over-year basis. Those numbers both cooled from the prior month, and that's one of the things that helped the markets last week. Markets were concerned if inflation came in too hot, the Federal Reserve would raise rates too quickly. We also got data on consumer prices last week, and in this case I drew the red line across to show you the 2% level. That's what the Federal Reserve Board has identified as the level which they feel is the appropriate level of inflation in the U.S. They use a different measurement, but the CPI and the core PCE that they use tend to track each other pretty closely over longer periods of time. And as you can see, looking at the chart, the year-over-year CPI line is now north of 2.5%. Now they're going to look at core, and that's the right thing to do. The core CPI is up 2.1% year-over-year, but that is now above the Fed's target. So we're going to see them, I think, talk down that hard target of 2% at this time. Also, last week on Thursday, as we do get every week, we got the regular initial claims for unemployment. This is people filing unemployment claims for the first time, recently laid off, let go from their job. That number has been well below what I would call the line of expansion. Right around 300,000. If we're under 300,000, it's pretty safe to say that the economy on a net basis is adding jobs in a month if you're getting about 300,000 a week in claims. Obviously, that comes out to about 1.2 million. But we've been well below that now for a very, very long time. Going back to around 2013, 2014, we crossed below that line. And given the fact that our population continues to grow, that 211,000 number as a percentage of the population or as a percentage of the labor force just continues to drop, In fact, the 4-week moving average fell to 211,000, the lowest since December 1969, when our country was smaller, when our labor force was smaller. We were getting 215,000 claims back then. So it's just really overall very positive development. And now we're just about wrapping up earnings season. Here you see the 11 sectors of the S&P 500. Like, for example, energy. All 31 of the companies have reported the earnings growth is up almost 95%. Now, obviously, this has a lot to do with the fact that the price of oil has increased and their fixed costs probably stayed relatively the same. But what we like to see is more than the 23.7% earnings growth, or as much as, is the fact that 344 of the 454 companies that have reported have beat their estimates. This is causing analysts to increase their estimates for the full year, although they're doing so with a fair amount of caution. There was a comment made in the Caterpillar earnings call a couple of weeks ago, where the chief financial officer called the first quarter the high water mark of the year. And of course, Caterpillar is a major international corporation, and many people think that if as goes Caterpillar, so goes the rest of the market. So that's probably one of the overhanging concerns of the market currently, is that. And then finally, in terms of economic data this week, nothing scheduled for today, Monday, but Tuesday we'll get into retail sales, business inventories, and home builder sentiment, along with New York State manufacturing. Wednesday, more residential information, housing starts and building permits, along with capacity utilization, expected to go up a little bit. Inflation normally correlates with increases in capacity utilization, so we're going to continue to watch that, especially when it gets near that 80% level. Thursday, jobless claims expected to be up a little bit, but at a very, very low reading. Philly Fed, and nothing on Friday. Thanks, everybody, for tuning in. We'll talk to you again next week.